Hey guys, hope you're having a nice day. Saint here. Welcome back to the channel. Uh this would be our episode 3 on our beginner to trader course. It's free, of course. All you have to do is subscribe to the channel, like, share with your friends, put a little comment. It helps me, it lets me know that you guys are actually interested in what I'm doing here, and just let me know if it's helping. If there's areas where you're still confused, you talk to me through the comments and I will definitely get back to you. So I pray we all have a very wonderful experience in this business or in this career. So today we're talking about supply and demand. But first of all, we need to understand what is this concept of supply and demand. Well, it's rather simple. There are imbalances when price is moving in the chart. There are imbalances all around. Now these imbalances are created between the buyers and the sellers. Oh my god, my network just basically went out. I have no idea why. So for now, since we're not using our chat, I'll wait for MTN to reset whatever the hell is wrong. So these imbalances between buyers and sellers occurs when the demand is greater than the supply, or the supply is greater than the demand, in which case we would have, when we have a greater supply, the price goes down, and when we have greater demand, the price goes up. So this is just your normal market forces. When something is in scarcity, it drives the price up. So when there's more demand, it creates scarcity, which drives the price up. So yeah, like I said, supply and demand are imbalances, or are created in the process of imbalances brought on by buyers and sellers. So basically, just market activities cause imbalances, and these imbalances are often fueled by a supply or a demand pressure in that area. So for example, here we can see this gigantic candle. My chart is squished up right now, but you can still see how big this candle is right here. So this is an impulsive move, or what we call an imbalance, because it's a fair value gap. Why it's called a fair value gap? Because between here to here, you can see that there was no much activity. Price just basically jumped up and got here and continued moving from there. So that's what we call an impulsive move or an imbalance. So once you can identify where these imbalances are, you can actually locate possible areas where institutional orders are being placed. So as a retail trader, you cannot move the market by yourself. In fact, if 20 of us came in, we can't move the market ourselves. Even if 200 of us came in, we can't move the market ourselves. So majority of the moves that you see in the chart are driven by big institutions such as banks or financial institutions of the sorts, companies and all that. So when they place their trades, or when they take their positions, they actually cause such a huge price movement that it is very visible on the chart. And that's what we use to know that, okay, in the zone right before that move, that impulsive move, that's this zone right here. Now we can actually see a lot of buyers stepped in here, and that's why they were able to push price this high. Even here you can see small red, price came up, pull back, came up again. So I've talked a lot about all that, but what is a supply zone? Now a supply zone is simply an area where sellers outperform buyers. That's an area where sellers outperform buyers. That just means that there are more sellers in that area than there are buyers. Meanwhile, a demand zone is quite literally the opposite, which is with it being an area where buyers outperform the sellers. So you have your buyers outperforming sellers, and that's why it's called a demand zone. Okay, yeah. Oh my, what did I write here? So in this, when you have a supply zone, you can understand that when price gets to that supply zone, it is going to face a lot of selling pressure, and that selling pressure is likely to push the price down. So for example, right here you can see there's a lot of selling pressure within this supply over here. The supply zone over here, which fed this down move into this demand zone right here. Now I'm sure you're wondering, oh, how do I know that that's a demand zone? How do I know? Why am I so sure? Well, you'll learn that by the end of this video, so keep watching. Now, sellers outperformed the buyers here, and that's why they were able to push price down, but buyers came, they stepped back in, and they pushed price up. So now above here, a lot of liquidity has been created. We have this we have 1, 2, 3 touches around this area here. So we know that a lot of liquidity has been injected above right here. We're probably going to see another impulsive move until Bitcoin takes out its high. So I'm looking at Bitcoin to 130, 150. That's simply just because I know that most people would want Bitcoin to reach 150. It's a round number, it's a psychological number. I'm not going to talk about psychological aspects. If you guys are interested, let me know in the comments. All right, moving on. So this is a supply zone. Price had its first impulsive move down, pulled back, came up, came down, came up again, came down, and then finally retraced, took out this high as liquidity, got into this supply zone, and immediately sold off. This is an untested supply zone, so you can always assume that as far as there's liquidity there and that zone has not been tested before, it's likely to hold. As far as you are also in line with the overall trend, always try and keep your zones in line, or rather try and monitor zones that line up with the overall trend, as a higher time frame trend. Now moving on again, I already said that when it hits a supply zone, selling pressure could bring it down. And for a demand zone, it's obviously vice versa. The buying pressure would now push it up. So demand creates scarcity, drives price up. This is just your simple market forces. Secondary school economics, right there. So supply, selling pressure, demand, buying pressure, selling pressure, buying pressure. Simple as that. Okay, so now we're moving on. How do we identify this zone? So let's enter our charts for a little bit. Now, when identifying zones, I like to do multiple things. Now, we've not gotten to the part of this course where I would actually show you how I combine all these things I'm teaching you, into one. But basically, you're going to see a glimpse of it right now. So We have our key levels. I'm just going to mark out some key levels. We have our key levels. I'm only going to really look at what's relevant to me at this time. Okay, so I'm looking at once again my trend. I know we are in an uptrend. Draw that. Just give me a second, please. Okay, so I know where we are now in our trend. We're in an uptrend. That's obvious. Okay, so now I have all these other things. I didn't need to set all this up before I started looking for my zones, but I like to have them because they give more clarity and more confidence for me in that zone. So I'm going to be looking at now, where did this impulsive move start from? So sorry about that. That has not been tested. So I'm looking at it now. When price broke out here, where did this breakout start? The breakout started from here. So I'm going to mark this out as my demand zone. Another reason why I will mark this out as a demand zone is this. If I drop down to lower time frame, you will see it a bit more clearly. Let me. Okay, so this is the zone that we marked right here, and this is what if you look at your 4-hour chart, you see it's a week, but I came down to my 1-hour chart and you can see that it's a full body candle. So you can see, when you see wicks like that, know that if you drop a time frame lower or 2 time frames lower, you're probably going to see something of the sort like this, but it's always a full body candle. Another thing that made me confident in this particular zone is, if you look right over here, it actually swept this liquidity. Why am I sure that this particular liquidity will work? Another thing I will check, I will use my Fibonacci and take it from this impulsive move here to this top right here, which is where we are currently monitoring. I'm going to look now, is this red? Is this red? Sorry, I'll still drop a time frame right now just for clarity, so I can really show you guys what to look out for. What to look out for when actually trying to do this kind of thing. Yeah, sorry, I'll drop time frame, so it's going to be a little further back. Finally. Okay, please let my chart load. I'll get back to it really soon. So it is actually quite simple. Once you see all those things, once you see, okay, you have a valid zone, like for example, now we see here, when price actually wanted to form the zone that I am currently observing, there was this move that happened. Then price came here and whoopee, we're up there. So what happened? You can actually see that it did a correction and continued. Now this correction, I'm going to look, is this correction within or under the 50% fib level of the entire move? Yes, it is. This is 50% line right here, and this is where the pullback stops. So yes, people bought here. This inducement, it's corrected, induced more buyers and move. Now once these buyers have been taken out and we have another break of structure, I'm going to be looking at what caused that break of structure. This caused this from this red candle right here. This red candle right here swept this liquidity and then gave rise to this impulsive move over here. So this red candle is my demand zone. From here, from this point to this point, and then drag it into the future, is my demand zone. So you can even see right here that when price came and touched it, it actually went. So if I took this trade now, I say I put my limit here, target the top, this is a very good 2.84 RR. So you get almost, you can actually just extend it, make it 3, and you'd actually still close out profitable for the day. So you can see just how easy it is when you're using this demand zone. We had a move, an impulsive move here. We had that impulsive move, pull back and sweep liquidity, and another impulsive move was created. So because of that sweep of liquidity, I am confident in this zone. And then because of this impulsive move and this fair value gap that was created after the impulsive move here, that's here, right here, I am like, yes, this is a good enough zone for me. There's liquidity. Yes, there's liquidity. Where's the liquidity? I'm going to use this as my liquidity source. There are multiple sources here, so I know that, okay, for a fact this thing would likely play out. See them, 1, 2, 3 sources of liquidity. Price taps your entry and goes straight to take profit. This is a very, very simple way to trade. Very simple way to trade. I hope you guys understand it, but I'll come back. I'll come again. We had our structure shift here. There's this consolidation, sweep of the liquidity here, and a break of structure, a change, a bullish break of structure. Price came and swept liquidity. I'm looking at the zone that it creates after sweeping the liquidity. Is there a fair value gap right after the zone? Yes, there's a fair value gap right after the zone. Then I'm interested. I'm just going to wait for some liquidity to form. Liquidity is over here. I'm even more interested now. Now all I need to do is wait, let price pull back into this demand zone. That's this box that we created, and as you can see, it came back immediately. Just touched it, played around there for a very short period of time, just a few candles here on 15 minutes time frame, and within few candles you're already at TP, a nice 3-to-1 risk to reward. So this is just a sample or an inkling of how you could use the supply and demand zone. For what we just spoke about now is our demand zone, so that's what pushes price up. Next we'll be talking about the supply zone, although I don't think that's going really necessary anymore. See it, supply. Now that was on the 15 minutes that we took here. Now if we want to take this on 4-hour, we have this to be our liquidity source right here, and then we wait for price to come and enter back inside this zone, which it did right here, which was the buy I sent on our group that we've been in since around here to here. So if I'm to check now how how many RR have we made since entry? I think I entered somewhere around here, with my stop loss just being here, and I'm targeting 130 like I said. But as of today, we got all the way, we got a total of, we've gotten a total of 6.7, or let's say 6.8 RR from our initial move, and we're still going, expecting Bitcoin to travel even more than this. Or how did I get this? Very simple. I simply just got my trend line breakout, checked my key levels for potential support zones in the area. This is the support zone in the area right here, and there also happened to be an impulsive move or a demand zone. This is my demand zone. There's liquidity. I just waited for price to come back, and here we are. Entered my buy, and now this is the story. So reading into these things really mean a lot. So I'm going to just quickly give an example with what I've shown already on the demand zone. So we have impulsive move over here. What led to the impulsive move? This tiny candle, or you can say this tiny candle here, but we can also use this entire red wall. So would mark it out like this and wait. So we have liquidity created. Price didn't actually come in, but just induced some people to come in early, and went, and when it finally came back into this zone, this is why I always recommend using a higher time frame zone. If you're in a lower time frame, you are more likely to have price just shoot past your zone. But because you're in a higher time frame and you also make sure that there's liquidity before it entered, there's also created liquidity here, and before it entered, and it enters your zone, you are more than likely to have your target met. So if you took this, I took this sell actually, not all the way to the very end, but I think it was I believe the trade was like this. I believe this was how the yeah, I closed it off somewhere around here, believing that it would buy off from this particular zone. So when it did not, I think I took an early buy. Yes, I did. I took an early buy here, got stopped out, just waited. Once it entered into this zone, I tried my buy again. You understand? So this is just a game of supply demand. Market is moving from point of liquidity to point of liquidity, and using supply and demand zones as pivot points. So when it strips liquidity, it needs a supply demand zone so it can now turn or change. And then obviously the amount of players in that direction. So if market is selling, you would want your supply zones to have liquidity, and if it's buying, you want your demand zones to have liquidity somewhere near it. So not really much else I can talk about supply and demand. If you want to draw it, like I said, just look for the point where the point right before the most impulsive move. So here, if I'm to do that here, I'll be looking at this green zone here. Some people would describe it as the last opposite colored candle before the move, but if you don't know that there's a red that made this thing to be a wick, you won't know that this is also an opposite colored candle inside of this place. So it just takes time for you to develop the eyes, or everything takes time. I said the eyes, Naruto. So yeah, okay, this is another impulsive move. So I can say this is a supply zone. It's a weak one. Why is it weak? Because no liquidity any created near it, one, and two, it is not in line with the overall trend. So we will be selling here, expecting the price would come back like this and give you this, but instead this is what you got. This is simply because you were not following the overall trend of the market. So trend is your friend, always follow the trend. When you are following the trend, your trades come a lot easier, you make a lot more profits, and your probability of actually taking a profit increases. Okay, so with that being said, that's how you identify your supply and demand zones. Just look for the opposites or the candle right before the most impulsive move. You see another one here, candle before the most impulsive move is a zone. Now all they can have many zones, but for you to know that the zone is a strong one, like I said before, it must be in line with the trend. Don't let your zone be too big. Like some I see some Twitter people, their zone be something like this. No, you can't have this as a zone. Where exactly are you now like targeting? This is too big for a zone. This is okay, this is okay. You don't want your zone to be too big. You can, if your zone is too big, you can drop time frame, look for the last candle before the impulsive move on that time frame, and you optimize it. You keep optimizing until it reduces a bit. So I'm sure if I go down to the 1 hour, I can get this box to come down to something like this. So as you can see, I've tightened it and it looks better, it's sharper. If I entered from here as opposed to here, I would make a lot more profit, obviously. So that is that's it for that. So once you've identified your zone, you need to wait for confirmation. So in here you go to your lower time frame and you get confirmation in here before you can, let me drop down to 30 minutes. You need to wait for that lower time frame confirmation for you to actually get in your trade. You don't just enter willy-nilly or anywhere you see the chance. Okay, yeah, so that's it over there. So if you were paying attention to the charts at this time, I remember I don't think I almost slept that night. So you had this happen, this is a valid structure change shift in your intended direction. You can see this break, here, then it pull back before moving. So on this pullback I entered, and the rest was history. So that's just the confirmation you need. You want that kind of structure shift in the direction that you are intending. So again, when you're in a supply zone, you sell. When you're in a demand zone, you buy. So my chart is the chart. Our training chart is looking more and more like the chart I use to take most of these trades. I've been longing BTC since here. We got here. I first started longing around here. That was the initial 15 minutes that gave us a 3-1, but I actually took it all the way up here. Took the sell down to here. I thought I was going to buy from here. Got stopped out. Entered here again, and here we are. Like I said, all I simply did was look at the demand zone. This is another demand zone right here, but a demand zone above a higher time frame demand zone sometimes is likely to just get broken. You're likely to just get taken out. That is just that's simply it. So some common mistakes, like I said before, some people do select weak zones. Like if you try to take from here, you would have been stopped out. That's because it's simply a weak zone. And what made it weak is there was, for me, no sweep of liquidity. So you can actually see price came and did something rather interesting. So yeah, price came and did something rather interesting there. We actually had this go this way. So if you wanted a very valid one, you would have had this probably take out here first, come up before moving. But instead, what we had, and when it comes back, so when it moves up here, comes back, we would have actually had that buy this long start from here. But because it did not sweep any liquidity, rather it just pull back and move, price took it instead as liquidity because of the zone, a stronger zone. So there were more buyers here than buyers here. That's just simply it. So it took it out, not enough liquidity here, took it out, and here we are. Use them as use their stop losses as our entry and took off. So you focus on this sharp move, and the sharpest moves, like I said, are the ones that are in line with the trend. So sharp move, in line with trend. Anything that brings price back down to this line, I know I'm going to buy again. You understand? So don't draw your zones too wide, and definitely don't just trade blindly. That's just, oh, it has entered supply zone and demand zone, by bam. No, you need extra confluences, you need extra confirmation, whether it be form of candlestick patterns, your moving averages, RSI, whatever it is that you use as a confirmation, but you need extra confirmation. So with that, my people, that will be all. If there's something you did not understand, you let me know. If there's something you want me to come back on and explain again, you still let me know. Comments. I will always be active in my comment section, so you guys can feel very, very free to talk to me. You know. Okay. That being said, now have a wonderful rest of your day. God bless you. Amen.